Hello friends, good week. How are you today? This is Vladimir and this is the first weekly review for March 2013. A bit late, and as I explained on the blog, I was in Riga, just back home yesterday, late evening, and today I'm ready to rock it again on the forex. um, it was by the way, Riga is a very lovely city. And Latvia is a very lovely country. You will enjoy that if you plan to visit there. I'm sure you will enjoy that. Just make sure not to go when it's very snowy, like it was during this weekend. But still, amazing views, amazing um, historical places on the city. So really amazing. And back to forex. As I said, it was a bit late. Sorry for that. Just with the internet there, I couldn't upload my weekly review, so I decided to make it relevant for today after the first day opening to see what the market provides. Well, as we see, the markets since Friday is moving zigzagging. Um, for me, it's a bit surprising that the market is so okay with the budget cut. It feels like um, for me, it feels like the investors are expecting from Obama and the Republicans still to find some middle way with all the issue around the budget. I think no one really understands, none of the investors really still understand how hard it could it could damage the economy. But things like that normally takes time. The first effect, if it comes, is like a small noise. The big effects take time until they are shown, they are seen, and that's exactly what I think is going to happen here. It's pretty clear that um, if there will be no solution with the budget, and the big companies just will have to cut the job numbers, and the unemployment rate will go up again, etc., etc. And there's no, most likely there's no happy end for that. So what are my opportunities? I think pound dollar is reaching a bottom. I was talking about this pair for a while, at least for short period. Um, that's why on a weekly review we have a bearish, as you can see, bearish convergence here. If you don't know what I'm talking about, I invite you to read my Sell the Rally, Buy the Valley book. You can find it on Amazon, of course. We have a bearish convergence here, which normally will provide us a correction up, and we will then could look for sell opportunities to go with the bearish trend. On a daily chart, there is a bullish divergence already in RSI playing around the 20 level, which is oversold, of course. And that's why, from my point of view, pound dollar is able to rise up. 20 MA will be the first target, first conservative target. And of course, as I said not once, I do think pound dollar is very able to reach this range again, which is around 154, 154 plus. So if it's investor style, take the pound, hold it. Um, the next levels to attack from my point of view around 149, 148 or so. 154 plus will be the final target, of course. If it's regular style, then I prefer to be more conservative and to wait for a clear break above this resistance that holds again and again. A break above this level, retesting this level, and then I guess we are going up. Here, this is the level, as you can see, 154 plus. It should be retested, maybe even a bit higher. That's my opinion about the pound dollar. Euro dollar. Well, euro dollar is very tricky. I've been talking about this pair long. I said my opinion not once. You know how bearish I am for the euro dollar, mainly because of fundamental reasons. Looking on a daily chart and a weekly chart, I'm not convinced that we are in front of big correction yet. Well, we get some bullish slope here already. We start to get a stochastic divergence on a daily chart. That could be a trigger that we are in front of a move back to 131 40 60 range, maybe a bit higher to 132.40, but I think this is it. I don't see the euro dollar rise higher. And so how to join the buy, if there will be any buy? Well, I would go and try to buy break of the trend lines actually. If there will be a break above the trend line, above this resistance which it's fighting, an RSI will successfully get above 50 and holds above. I think that's a bullish trigger that could take the euro dollar to the mentioned levels, 131.40, 60, then breaking above that, and most likely we're back to 132 plus. Well, that's my opinion about the euro dollar, and of course, if it does not make it, then I would look, of course, to sell. Well, sell the rally, of course, it's perfect, but in case there is no rally, sell the flag. Very likely that 2-3 days here it will create a flag, then break the flag down below the 130, take us back to 129, 128.70 probably, closer to the 200 moving average. Then I guess there will be a stop and a retrace. So that's my levels for the euro dollar. That's how I see the things. I prefer to sell rather than buy, and it's only a question of how to join it. Well, you know my two scenarios now. So what about the cross euro pound? You know how bearish I am for this pair, for this cross, and as I said, for a long run, I'm pretty convinced we are going back to this trend line. From my point of view, there is a very stiff level that will be tested, and that's here, right? That's these two candles range here. The question is how and when. Well, from my point of view, that's what I will be looking for on the 4-hour chart. I do want the pair to place itself below 0.8585 and 0.8590. Place and hold, and of course RSI to break this support level and hold below. If it's not happening, well, let's say it gentle. I would, looking back on the weekly, the long-term trade, I would not be surprised if it creates a stop here, push one more time to around 0.88, 0.89, again maybe a few bit higher, and then we get much stronger and deeper move. And that's exactly what the ways I look to sell the euro pound. Break below the support, could give the okay to go with a small protection. If it stops and rises again, which I would not be surprised if it happens, honestly, it looks very possible for me, then sell the next high based on the weekly chart and a daily chart divergence, then will be created. Just imagine if it pushed from here higher, the next high will be created on the MACD, the next divergence that will be created, and then we will get much deeper move. I remind you, we got more than 20 candles right, never got a retrace back to the Bollinger Band, so that's why I'm pretty convinced there is still room to go down. Right, that's my opinion about the euro pound. Then dollar Canadian. Well, I've been talking about this pair, and well, I'm open. My mind is open for a potential down move back to 102.20, maybe even a bit lower, but I think it will be limited. I kind of get a feeling it will be limited. 20 MA, maybe even the next support on 101.50 level, but I do think that's it. Watching the weekly chart, it feels for me, as for now, that the dollar Canadian is very able to go back to 104 plus, closer even to 105 maybe. So I would prefer buy the valleys here. If we will get a deeper correction with a bullish divergence on a 4-hour or daily chart, take the buy. I think this pair is able to go higher. The final level that I think I would change my mind, that if the pair will break below 10080 again. That's my opinion regards the dollar against the Canadian. How about the Aussie Canadian? Well, a very interesting pair from my point of view. Um, we had the bend to bend move. I was talking about that on my previous weekly review. The pair did the correction as I expected. Now it's rising up again. Let it go and start to follow the next important level. And from my point of view, the next important level is starting from 105.70, 75 up to 106. 15, 20, maybe even a bit higher. Pay attention to this level. I guess we will get a continuing divergence forming here, and that could be a beautiful opportunity to sell up here. A stop around that combination of daily divergence and the 4-hour bend to bend. If you can see here, right? If it keeps pushing, then it's going to be bend to bend, which will mean a beautiful opportunity for a sell from the highs. In between 105.70 up to 106, 2025, I think that's the levels we need to pay attention to. It could provide us a sell opportunity. In case it goes above 106.25, let it go. It might go for the historic, for the last year's high around 107 plus, and maybe even for the historical high 109. Just one thing, we are coming for a long-term top, and the reason I think so is a monthly chart. You see this monthly divergence? That's a monster divergence. Whenever it stops for a long term, we are going down all the way. So stay tuned for this opportunity. It's going to be interesting for a very, very long run. So Aussie Canadian it is. For a short-term combination of daily levels with the 4-hour chart, band to band could provide a beautiful sell. Well, for a while I've been talking about the pound New Zealand. I actually don't have nothing to add about this pair. I keep my opinion based on weekly charts and monthly chart. I do think that first of all we are on the way to 184.70, 185. Then maybe even back to 186.50, 187, but I guess it's going to be a top for this move. Then we'll have to reanalyze. And in case the pair keeps pushing down, and remember, as I said, weekly candles pattern will be sign for us to jump in. One thing to remember: this trade should be traded only with investor style. Only, nothing else. That's my opinion. Alright, so that's my main forex opportunities. Well, few words about the yen pairs. As I said, this is a weekly chart. I think March, April, potentially even May are going to be bearish months. It's going to be bearish period for the yen pairs. So I would rather look for sell opportunities than buy. That's all I have to say. I don't see any reason to jump in right now. Two pairs that I would follow closely is pound yen, and the another one is CAD yen. They both seems to create a head and shoulders. Shoulder, head. Probably we're in front of another shoulder. It could be very, very interesting sell opportunity. And again, CAD yen as well. You can see it here, right? Looks good. Plus, it's stopping here this trend line. So I guess with a small protection above the 20 MA, above 92, we could get a beautiful down move here. Maybe back to the gap, maybe even lower to the first gap. There is a lot to move. This is my opinion about the CAD yen and pound yen. They both seems very, very, very interesting. Going to the indices and a bit about commodities. Well, I was talking about the wheat for a while. We are coming closer and closer to the level I'm looking to buy. That's above 675. From my point of view, 685 is pretty good level to step in and buy the wheat for a long term, long cycle, and hold it. Could it go deeper? Of course, but we are talking here about the weekly divergence forming, weekly supports, weekly trend line, and a daily divergence forming right now. So I guess we're in front of a bottom. 685 it is. Then I think next important level will be 650 psychologically. Then of course 610. That's all. Each of these levels very very potentially for the attack. So wheat is a great opportunity from my point of view. What about indices? Well, you know my opinion, and I was talking about it not for the first time. Um, I think not the higher the better, the higher the worse for the economy. That's not a real up move. Big companies are cutting jobs. Big companies are cutting jobs because they're afraid of losing money. And Bernanke keeps printing, keeps telling everything is okay, and that's a volumeless rise. Could it go higher? Yes. Yes, and I have no problem with that. Just remember my words. If there will be no correction until the summer, I'm afraid very much that this summer could be a disaster. This summer could be a disaster for the financial market. So I really hope for the markets that March or April or even both months would provide us sell opportunities. Watching the weekly chart, again you can see MACD is going down, right, the bearish slope, while the candles are bullish. On a daily chart there is a perfect divergence setting up, so watch out for a potential false break, for a potential strong bearish candle in order to jump in, and that's relevant for Nasdaq, which could provide us a band to band move on the next resistance. For conservative trading, if you don't want to sell a top or try to sell a top, wait for a break of the trend line. Break of the trend line then should open the doors for a down move. And of course the same about S&P, as you can see, right, right here, same story, same divergence, weekly chart weakness, clear weakness. So as I said, from my point of view, the higher the worse to the economy, and this is my opinion about that. And now one stock that I would like to talk about, Apple. I've been talking about a down move there. Get ready for a buy. Get ready for a buy. I'm not convinced that 420 will hold. Not convinced that 420 will hold, but 350 up to 380 should hold, and that's a perfect level to start buying back the Apple shares. Watching for a daily potential false break to jump in. Watching for a weekly candle around one of the supports I mentioned for a more conservative way. And if you want the most conservative way, then follow the break of this trend line, a break above this trend line, and we get the okay to buy. Final target for Apple. Well, I think it has all the reasons to go back to 530, maybe even higher. Maybe even higher. This is my opinion for Apple. For those of you, by the way, who know me for a long time, do you remember I started to sell Apple is going down when it was here on 2012? Do you remember that? Around 500? And every high it created, I told you it's going to crash. Right? Well, looking back in history, it was correct. Weekly divergence will never lie. Never. Yes, it could take time. Yes, it could last longer than you expect. It will never lie to you. And if you have patience, and if you have a margin, and you are not over leverage yourself, you will be good, and you will make money. That's a simple rule of trading. Well, and another good opportunity from my point of view will be around $1 ZAR. With a daily candle pattern, I think it's worth to attack that. This pair, there's a weekly monster divergence. Take investor style, hold it for a long term, enjoy the swap, and the next level to attack. Well, first of all, we are here, right? We're almost here. That's the first level to attack. The next level to attack will be here around 950 only. But the next one, of course, historical highs. But based on the weekly divergence, it's time to collect it with investor style. Enjoy the swap. The swap here is monster. Just one thing, you should make here ultra conservative trade because it's really for the long run and you don't want to overexpose yourself just because of the swap. And if your account is swapless, like Islamic account where you don't get and don't pay swap, this trade is not for you. Very simple. Well, that's all, friend. That's my thing for the upcoming week. I do want to see, well, to give a market a bit chance to understand what's next, because right now, after the budget cut, seems investors are looking for a direction. That's all, friends. I wish you a wonderful week. Once again, sorry for the delay. Next week, of course, we're back to normal. Have a wonderful day, wonderful trading week, and good profits. Yours, Vladimir.